Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Monday the 4th of March 2013. Well, it's actually been a very quiet start to the week for markets. Now, we did have some real fireworks on Friday, so it's no wonder really that we've seen a bit of a pullback, bit of a lack of volatility in the markets. Stock markets have opened slightly lower, but in the FX market, we're really just kind of rebalancing after some of those big moves. Remember, we got sub 130 and also sub 150 in euro dollar and in cable respectively on Friday. Well, we haven't had such dramatics today, at least, most certainly not. I will go into more detail with euro dollar in a moment, but the pound is very much in recovery mode, even though the recovery does seem fairly shallow, and we think that there could be some further selling pressure to come later on this week. It's generally kind of held above 150. Now, overall, the impact of the sequester, so those public sector spending cuts that came into play on Friday in the US, they haven't really been felt by the markets, with the focus now turning to the budget discussions at the end of this month. So yet again, the markets had to come up and face up to another fiscal crisis in the US, but it's got used to it now. So that's why, potentially one of the reasons. We do think this will be the calm before the storm in the markets though. We've got a lot of event risk coming up, not least for the euro. Let's take a quick look at euro dollar. This is the daily chart in euro dollar. As you can see, we're really clinging on to that 130 handle. We've managed to kind of really oscillate between kind of 128, 129.60 and 130.40 today. That seems to be kind of the level that we're on. The market doesn't seem to be willing to go one way or the other, so we're a bit directionless. However, we have got an ECB meeting and we think on balance that the bias will be lower. But until then, until we get the kind of firm commitment really from the ECB that they're going to be dovish going forward, which we won't get until Thursday, we think euro dollar could probably hover between kind of 130 or 129.10 and 132.50 on the upside. Now, the other thing that we're watching today is the Aussie dollar. It declined to an 8-month low on the back of some news out of China. This is the Aussie dollar daily chart here. So we got news out of China that it was curbing its property market to try and stop it, prevent an asset bubble from forming. Bad news for growth in China. That was considered bad news for the Aussie by the market. So what we've seen here is we got below, got all the way down to 101.15 at one point. Now we've managed to claw back some gains, but we're still getting thwarted at previous resistance levels, 101.50 and also 101.80. They're the two key levels. If we can get above 101.50 today, then we might have another stab at 102. Now remember, overnight we've got an RBA meeting. We don't expect anything to come out of that meeting. We don't think they're going to change policy, but if they sound less dovish than expected, so if they suggest more kind of cautiously optimistic, if you like, then we could see Aussie dollar actually rebound a little bit, even though we do think gains will be capped around that 102.50 level. On Wednesday as well, we've got some Q4 GDP data out of Australia. So this cross, even though it was kind of sold off very heavily at the start of this week on the back of external factors in China, we think domestic factors will drive it going forward. And there is risk really that we are now oversold in Aussie dollar and that we could pull back a little bit more towards that 102 level. But overall, good luck trading today, and please do join us tomorrow for more. Thank you.